And joining us now to discuss is CoinDesk Director of Data and Indexes, Galen Moore in Boston. Welcome to the show, Galen. So we're seeing big movements among folks with big wallets in crypto. So what does all this big moving of crypto mean?
Sure. I mean, I think it's fairly obvious that anyone moving $1 million or more of Bitcoin at a time is a fairly large investor, possibly an institution or organization of some kind, possibly a high net worth individual. I think there's some, sort of grain of salt to be taken here. This is an entity adjusted metric, meaning they are trying to rule out transactions that's just a whale sort of moving funds from one wallet to another, and really focus on transactions that reflect buying and selling in the market. So that's somewhat of a heuristic, and you always have to sort of take with a grain of salt data like this. But I think what you can clearly see in the chart is a marked increase in the share of value transferred on Bitcoin, which is represented by the very largest of transactions here.
Do you have any idea if it's some holding, some selling potential? What are they doing?
Well, the coincidence with the run up of this past week, I think, is noted, right? It's not. I think you could look at this chart and draw a line directly from one to the other and say, look, this is a rally that's driven by institutional activity. Now, at the same time, we've also seen an increase in the number of addresses holding very small amounts of Bitcoin. So I do think there's certainly retail participation here as well, but everybody at this point trying to sort of read the tea leaves and divine whether this is a retail-driven rally or an institutional-driven rally. And I think certainly this chart points to the latter.
All right. We also have another chart, this one from Coinmetrics on tether to ETH, indicating a shift of tether activity from Asia trading hours to U.S. trading hours. Now, tether underlies most of the trading activity in and out of Bitcoin as well and other cryptocurrencies. So how do you interpret this chart?
I think it reinforces an institutional narrative, Christine. This is a longer-term trend here. Trading activity moving away from China along with mining and investment. And the movement here, although the chart here doesn't show, but the movement here actually began at the beginning of the year, long before the May crackdown out of Beijing. And what we're looking at here is trading activity in Tether. Shown by the trading hours during which Tether moves. So Tether is known as a stablecoin used primarily by Asia investors. And the data presented here by Coinmetrics shows some change in that. We're looking at the hours when Tether issued on Ethereum is most frequently moved. And for most of 2020, the peak hour was between 7 and 8 a.m. UTC, which is the witching hour in New York. In 2021, at the beginning of the year, you started to see that peak hour move later and later to where it's now at about noon UTC, which more reflects a mix of U.S. and European trading hours. That's about 8 a.m. New York in summertime. And I think what you're seeing here is evidence that Tether activity is moving from Asia to Europe and the U.S. Now, I mean, look, Tether is only available on one exchange that's accessible to U.S. Retail investors. So it's probable that if this activity is driven by U.S. investment, it's primarily over the counter. And OTC desk clients are almost exclusively large investors and institutions. So, I mean, I think taken alongside the chart we were looking at a minute ago, it's certainly a sort of an indicator that points in the same direction.
Okay, interesting. So does this indicate that investors, high net wealth investors, institutional investors, do not really care about the regulatory discussions going on in the United States? It's not giving them a chilling effect at all into how they're positioning themselves into the crypto markets?
It is all anybody I am talking to is talking about. But that said, I think you had a guest on yesterday who made a pretty good point. We're talking about the U.S. government printing or borrowing $1 trillion. And at the same time, we're talking about Bitcoin. What better marketing or advertising for the orange coin could we possibly come up with here? I think, perhaps not only is the market, both retail and institutional, shrugging off the concern of a potential increase in regulation, but I think you also see maybe some sense of enthusiasm about the fact that Bitcoin is being discussed in the Senate in the context of an infrastructure bill.
All right. And so everyone is wondering, they're seeing a pop in the markets. Is it sustainable? Do we see higher highs from here, or will this just be temporary?
I think for people investing in the long term, at least for myself personally, there's a conviction that Bitcoin has a lot of room left to run, and not only in terms of where the price number will be in a year or 2 years, but in terms of what uses and what role it'll have in global finance. So certainly, I think if you're looking in the long term, everything that's happened in the past weeks has a kind of a bullish flavor to it. Whether this rally is a sort of a dead cat bounce or the beginning of a change in the market remains to be seen.